Hey, everybody. It is Chuck Barone on this fabulous Friday, May 17th, 2024. Thank you, Attila. Way to go, my friend. I appreciate you. Anyway, it's great to be here. Let's wrap up another funky, crazy, weird, nutso, bananas. I can't think of all the good adjectives, but that's a few of them. What are we living through, guys? It's nutsoville. You saw these markets today? Well, what were they rallying on? Is it just because they wanted the Dow above 40,000? Is that what the rally was? Ooh, we got to beat this number. Is because there was no real data to drive it. Crazy. Anyway, before I get rolling, as always, let me just take a half a second. Welcome everybody to the show. Welcome all my regulars on the live chat going here. And as always, everybody, thank you so much for your support, for showing up here, watching these videos, your questions, comments, likes, your super chats. Thank you, Attila. The people who are hitting my PayPal. Thank you, Johnette, and all the regulars, Ed Sullivan, and a few others. I appreciate you guys and the support for the show. All right, let's talk about markets today. So the markets rallied up. Well, almost. No real data today that the markets were talking about. I didn't even really hear CNBC talking about the leading indicators that came out today. But the market rallied up. So the Dow, new world record, up 134 points, closes 40,003. So it breaks the all-time high, breaking 40,000. Good for you, Dow Jones. The NASDAQ can sustain the all-time high, falls just 12 points, 16,685. The S&P breaks another record, up 6 points today, 5,303. So you got stocks pretty much at their all-time high. I've talked about the outrageous PEs here. Prices a little, I think the stock market, to quote my Wall Street buddies, is a little bit overbought right now, okay? But stocks continuing to rally. Of course, the bulls on TV, rah, 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 rah. Funky, how you doing? Kevin, all right. Rallying these stocks up, rallying the suckers into buying more and more stocks. Now, if you're holding stocks in your portfolio, that's great. You should have probably 50% or so of your portfolio in stocks, mostly, hopefully, dividend-paying, defensive kind of stocks, not reaching too much for the speculative stuff. But market's just going bananas, man. Now, remember, though, the higher they go, the harder they fall, right? And this is coming. You can just, it's almost like, you can see, you're driving down the highway, it's a clear day, and you can see all the way to the horizon, and you can see there's a big crash up ahead, and you can see all the sirens and the ambulances, and, it's about a mile or 2 miles down the road. Are you going to speed up at that point? It's crazy, guys. Bond market, well, the bond market had a little bit of a sell-off today, but nothing dramatic. The 10-year up 4 basis points, 4.42%. The 2-year also up 4 basis points, 4.83%. Nothing really earth-shattering there. I think, the bond market has been in a long-term bear market since the Fed really started raising rates. And this is not any kind of sign that that's turning around. I think that we'll see how this inflation stuff plays out as we're moving into the summer here. It's going to be fascinating to me to see if the Fed has the stones to cut rates during a presidential election, which I don't believe they'll have the balls to do. But even worse or even harder decision would be to raise rates, which I'm telling you guys I wouldn't say it's a distinct possibility, but it is a possibility. This has reminded me back in the day, in the 70s and 80s, when they had inflation beat. They were sure of it until it wasn't. And then the unemployment came. But guess what happened? As unemployment rose, so did inflation rise with it. That was the wonderful period of stagflation, they call, right? And it seems to me like, well, they say if you don't learn from history, that you're destined to repeat it. I think the Fed, and they've learned some lessons from that period. But nonetheless, it seems to me like they're insisting they're going to repeat on it. Because it looks to me like, let's face it, if rates were so high that they really were restrictive, okay, we would see inflation way closer to target, at least moving that way, which it kind of really, if you're going by CPI or PPI, which it really hasn't been doing, it's not anywhere near the twos. And I don't really see it going that way, judging by what I'm paying for everything I have to buy in my life. So it's crazy. The bond or the dollar today, not really much action. The dollar down 4 basis points on the index, 104.46. So not much there. I think the dollar should be stronger. This is all moving the dollar on the idea of rate cuts. Now they have a 68% probability that rates will get cut. They're looking for the first cut now in September. So that's what the way they're pricing it in. I'm telling you, I would be shocked, blown away, if they cut rates during the heat of this election. I just don't see it happening. Now let's see if I'm proven wrong, which certainly wouldn't be the first time. Precious metals, this is, wow, you guys seeing this stuff, man. Everybody that watches this show, I think, celebrating a little bit. Gold rallies up nicely today, up $38.80, $2,415.30. Way to go, gold, man. They broke through 2,400 like it was nothing. Now let's see it. Now we need to go to the next step, which is sustaining that, right? Silver, now I wanted silver to break 30. Well, look what silver does today. Up $1.93, $31.50. So blows right, just like it blew right past 25 to like 26 and change. Same thing here, right past 30, 31.50. An amazing, amazing bull run getting started in gold and silver. I'm telling you guys, maybe this is not the very beginning of this bull run, but it's certainly not even close to the halfway point. I'm telling you, we're going to see probably all-time highs in silver. I'm not sure if gold will make all-time highs, but I'm thinking if silver does, gold probably moves in tandem with it. Gold right now, the big favorite of central governments. China, Russia, governments around the world buying gold by the ton, It's a Chinese demand. If they would allow China to buy all the gold they want, it would literally suck up all the gold supply in the entire world. Crazy. Oil today. Oil's not going the way I thought it was going to be going. It's up another 74 cents, $79.97, knocking on the door of $80. I think that this Middle East stuff and all the noise around it is making these markets kind of a little bit higher than they should be. I don't think there's any kind of shortage of supply on gold or on silver I got gold and silver on the mind today. On oil that's moving these prices up like this. I'm going to go dig it. I need to rechart this and have another look at oil, but in my mind, I really think that oil wants to be selling for less than it is right now. Bitcoin rallies up again today, up $1,776, $66,905 for Bitcoin. Bitcoin rolling on, man. You got to say, guys, it's strong, man. It's holding these numbers. It hit its support number and bounced right back up from 62 like it was nothing happened there. And now it's gaining more and more support. Now you got the Chinese ETFs coming online. You're going to see a ton of new money coming into Bitcoin. I think I mentioned it yesterday. I want to mention it again today. The state of Wisconsin now buys $163 million in Bitcoin. So now you're actually getting institutions interested in Bitcoin. If that becomes more the norm than the weird, shocking fringe thing, man, there's no number how high Bitcoin couldn't go. All right, let's talk about news you need today, because I want to talk about these leading indicators and a couple other things. The leading indicator numbers came out today, leading economic indicators. They take a huge nosedive again, guys. Median or the index fell 0.6% from last month. Economists were hoping that it would be limited to 0.3, so they missed big. Now the index actually was up in February, squeaked out a small gain. The first time in about 28 months. Here's the thing about this index, guys. This index, like the inverted yield curve and a whole bunch of other indicators, is an indicator of recession coming, okay? Now, up in February and then down bigly in the next 2 months. It had been down 24 months consecutively before February. This tells us how the economy is doing. It's been down every friggin' month except one for almost 2.5 years, guys. But somehow the stock market can spin this into good news and the stock market rallies. Well, I think Greenspan once, I tell you, this is taking me back to the dot-com bubble. Remember Greenspan's phrase? The market's suffering from irrational exuberance. I think that might be where we're seeing here. Now, the 24 months, down 26 of the last 27 months, that kind of losing streak has only happened twice before in the history of this index, both times leading to serious recessions in the 80s and last time in 2008. More evidence, like I've been telling you guys and showing you the statistics, reading you these numbers. The consumer is tapped out. The consumer's done, man. Now they're gonna continue to spend their income, but I think the big binging on credit to continue to maintain these lifestyles is not happening. You can see it in other subtle little signs that you may not have even noticed. You know, all the harping about McDonald's. If you're reading local newspapers, I'm one of the guys who still does. You can see all these ads in there now for, you want to sell your old gold, you want to sell your watches, you want to sell your silver tea sets. When you see that kind of stuff, when people selling assets to raise cash, guys, that is not a sign of economic strength, man. The world has literally gone mad as far as its finances go. And this is not going to end well. I'm telling you right now, recession is coming, guys. Recession is coming. Hopefully it's not going to be a giant smash up. I just don't know how it can't be when you have all these factors that we've been talking about and harping about. I don't know how it can't be when you have all of these things happening together all at the same time. And that's not even counting the geopolitical stuff, the presidential election, divisive, weird politics in this country, how Congress can't do anything and get anything finished except grandstanding, how the population sees basically two different realities. I mean, all of this stuff, guys, is not going to end well for this country. Now, what happens is when you have times like this, these really, really, really dark times, what happens is ultimately there's a big crisis somewhere, an existential kind of crisis, right? Where the people are forced to think back to like September 11th, right? Remember for about 72 hours there, we were all united. It was all U.S. We forgot about blue team, red team. We forgot about hating George Bush. We forgot about, the 2000 election. We forgot about all the nonsense that we had been arguing about forever. We all came together. That's what it's going to take to get this to happen again, guys. Except this one's going to have to be much bigger than 9/11 was, which is a scary proposition to talk about and think about. But because the bigger the crisis, obviously, if it's really existential, something like World War II, where literally your existence was at stake, right? And it's a longer term thing. It's not a one-day event like 9/11 was, but like that war was from 37 to 45. That's the kind of crisis I think we're going to looking at coming up. I just hope it's not going to be a gigantic war. If you read the book, The Fourth Turning, it talks about these cycles of history. They go back to the saculum of Rome and all this interesting stuff. And there's basically every 4 generations, there's this big crisis. If you go back through history, in this book, they take it all the way back to the 1300s. You can see this pattern all the time. It's crazy. Like every 80 years or so, we have these gigantic crises, right? So even in this country, look back, okay, 1945, the war, World War II. You go back 80 years, Civil War. You go back 80 years, Revolutionary War. I mean, just these cycles in history are incredible. And I think we're well overdue right now for that cycle to come again. And it's going to create this crisis. This is the rhythms of history, apparently. And it's going to be interesting to see, watch. Hopefully I live long enough to see the whole cycle play out, because it takes years and years. But it's going to be fascinating to watch it all. All right. Fine. I was reading this article today. They were saying, and this is hopefully, we've been talking about this stuff on the show a little bit too. Financial illiteracy in this country, epidemic levels, people just doing the wrong thing endlessly with their money. This said financial literacy now costing the average American over $1,500 per year. Not good. 3 big culprits of financial illiteracy. Number 1, overuse of credit cards. You've heard me harp on this forever. That's the surest path to the debt treadmill. That's one of the people don't understand even how much they're paying on their credit cards. People don't care about interest rates. They only care about payments. So that's a big part of it. The second part, too much going into your vehicle costs. The cost of cars, the payments attached to them, the insurance and the maintenance, keeping people broke. Number 3, keeping up with the Joneses, buying luxuries you can't afford. And everybody has to have that Hermes belt or that Gucci handbag or the whatever it is. In this world right now, at least in Vegas, the new statusy thing is a Tesla. And everybody, you're cool if you have a Rolex and a Tesla. It's the new Mercedes, I guess. But we've talked about all 3 of these things in depth on this show, right? We've talked about credit cards and the doom they bring to you. I've been ragging on about new car prices, the payments attached to them. I've talked about insurance and how the costs on the insurance are going through the roof. And you've heard me talking about spending your money prudently, not being crazy. Don't reach, don't impulse. Buy what you got to buy, spend what you got to spend, but do it prudently. Take your time, think it through, spend your money intelligently. If you're doing those things I've been telling you, financial literacy is not one of your problems. Okay, let's go through some quick hitters to wrap it up. I'm already way over time here. I'm going to do a special show soon on gold and silver, though, especially talking about how they've managed to reach these numbers, what the future holds, where the supports are, where the problems are of reaching new highs and breaking records. I still tell you guys, you're going to see all-time highs on gold and silver before this bull runs over. Believe that. All right, quick hitters. Meme stocks, it's all over. Who's that one schmuck that leads the whole Robinhood group? There's a guy that just cost people more money in the past week than I've ever seen one person cost. He's an idiot. This is the kind of thing I've been warning you guys against. You don't invest money that way. That's called speculation. You might as well come to Vegas. Hit me up here on a chat or send me a comment. We'll get together for a cup of coffee or a cold beer, and I'll tell you why you shouldn't be fucking around gambling with your money. All right. Fed President Bowman, I was checking him out on CNBC this morning. Here's the big quote of the day. He will not rule out another rate hike. First time in a long time I've heard any Fed person talking about the potential for another rate hike. So maybe they're going to now take this whole meme that Powell put on there of it's not likely to be a rate hike, friggin' idiot, and they're going to start talking that one back. What about Musk's $50 billion, guys? What do you think about that? You think that the Tesla shareholders are going to vote to give him a $50 billion payday? I got to say, I think it's going to be a tough pull But this is Elon Musk, so anything's possible. Powell must have been at the same event I was over the weekend. He also tested positive for COVID, is quarantined working from home. Susie Orman, guys, be careful who you're listening to. Susie Orman says, do not retire unless you have $5 to $10 million saved. $2 million is, what did she say? $2 million is nothing. I don't know what planet these morons are living on, but it certainly is not the same planet I'm on, guys, okay? And with that note of madness, 2 million is nothing. That's a quote you can put down for Susie Orman from now on. Another one of these media sensations pumped up, who obviously maybe has some good advice somewhere. I've just never heard it. Who now believes you have to have $5 to $10 million to retire, basically telling all of us we don't get to retire. Good. Nice job, Susie. Anyway, I'm already over 20 minutes. That's it for the day, guys. That's it for the week. Let's wrap this puppy up. We know we got more madness coming next week. It's going to be just, guys, batten down the hatches because we got madness we're living in, and it's going to probably run all the way through this election. Have a good weekend. Get away from this stuff. Relax. Enjoy your family, your friends. Get away from the madness for a little bit. We will be back on Monday to bring you the news you need. Don't forget to hit the like button, guys. Hit that like button right now. And Monday, until then, guys, take care. Thanks. Whoop.